All right, Logan, are we gonna have a conversation here, or it's just a monologue from me? I just go? Okay. And please, gentlemen, ladies and gentlemen, today we're going to talk about staying compliant with all the different levels of government in the United States of America. And please, if you have any questions, people in the crowd, just feel free to interrupt me and ask me any question. So today we're going to talk about different types of tax that we need to get done if we're a business in the US. So I'm going to start with income tax. So if you have a startup, maybe you've incorporated a Delaware C Corp. That's the most popular type of startup. So first things first, you'll need to produce an income tax return to the federal government. Now that if you're in Texas, you only produce that to the federal government. There is no income tax, state corporate income tax in Texas. But in your state, if you're in a different state, you may have state corporate income tax. Know that that income tax is 21% of your profit if you are in Texas. So that's the amount on every profit dollar that you're making. Also, if you don't have a C Corp because you don't have investors and you're yourself you're a business and you don't have other investor, you're the only investor, you will most likely have an LLC, a limited liability corporation. And what's good about that type of corporation is that you can decide to elect an S Corp. That's a taxation wording thing. And with that S Corp, part of your revenues can be distributions. And what that means is that you can avoid paying Social Security and Medicare on part of your revenues. And that could be like 60% of your revenues. So you can save that 50%, and Social Security and Medicare, that's a 15% tax on every dollar that you're making as a business owner. So that's a little legal, trick to kind of save taxes on that. Do you have any questions on that? Topher, you're looking, do you have any question?
I remember going through this when I set up my S Corp. Yeah, it's considered pass-through income.
That's it.
You don't have to pay as an employee. You don't have to essentially pay into workers' compensation or into employee payroll tax or any of that other.
Right. But you do technically on part of your revenues, which the general amount recommended is like 40%. But on 60%, you don't have to. But you don't need to do, workers' compensation insurance if you're the only employee in the business as well.
Yeah.
All right. So that's it for income tax and corporate income tax. Also, just a little reminder that in order to know what you owe in taxes, you need to do your bookkeeping. And so also I would do my bookkeeping mainly to know like if I'm profitable. It's very important as a business owner to know if you're profitable or not. And if you're a startup, your burn rate, how much money you're burning every month. So you'll know that by doing your bookkeeping. We recommend QuickBooks Online or Xero as accounting softwares. Also, if you're a small business, you can also use Excel, and Excel is free. So that's it. Any questions or comments in that regards?
About ZapRight.
I mean, ZapRight is a good, I agree. I mean, I don't know if ZapRight is their accounting system is ready on ZapRight. You can only do invoicing for now. So, but I know that.
Unless you export to a CSV. I think they're working on like a deeper accounting system, but they do let you export.
You can have all the income, you invoice your clients with ZapRight. Like I use ZapRight myself. for some invoicing, but the expense part you won't have with ZapRight. So yeah, for now. I think John is working on that, but for now you'll need other tools to know to measure your expenses.
Okay.
Okay, good, but good point. We love ZapRight here.
I'll have to crack the whip at John.
Yeah, so like I was saying, so you have also if you have employees in your business, you will need to set up a payroll. And well, when you have a payroll, first off, like I said, everybody needs to pay that 15.3% of, it's called FICA, but I mean Social Security and Medicare. Half of it is paid by the employer and half of it is paid by the employee, but you still need to take the money from the employee and give it yourself to the federal government. So don't forget about that. There's also state filings. So if you need to register, if you have in every state that you have employees, you need to register with the state. And then you need to file some paperwork with them on a monthly or quarterly basis. Also, you can have registration with counties. Some counties require you to register with them and pay some taxes with them, and even cities. Okay? In Texas, we're well off because we don't have all these things to register except for the Texas working compensation insurance. But be aware that if you have employees in other states, it gets really, it can get really complicated. So we recommend using a payroll software to manage all that. That's called Gusto. There's also JustWorks that is okay as well, or ADP, but highly recommend to use a payroll software provider to manage all these taxes.
They also do the filing?
They do the filing, they do the remittances, they do pretty much everything. Yeah. But sometimes they make mistakes and then you receive letters and then you need to do some bullshit paperwork. Yeah, that's why TechC USA, my business, we do that for our clients. So, the business owner doesn't have to go through all these paperwork stuff. Any questions, comments? No? All good?
Yes. What's your business called again?
It's TechC USA.
How do I spell that?
Tech space C, like just the letter C, and USA. And my website is techcusa.com.
Thank you.
But if you need my help, I'm here, and we can discuss afterwards. So now, other taxes in the United States and basically all Western countries, there's something called, you probably heard about it, capital gains tax. So if you spend your Bitcoin or sell your Bitcoin, every time you do so, you have a capital gains or a capital loss, unless you sold it or spent it at the exact same price that you bought it. There's a good method. So if you're a small business in the Bitcoin industry and you want to pay some suppliers, you receive Bitcoin and you want to pay vendors in Bitcoin as well. That's, I think, quite common with Bitcoin companies. You can use a method to calculate your capital gain that's called last in, first out. So basically, last Bitcoin that came in is like your cost basis when it comes out. What I'm trying to say here is that if you have this continual inflow of Bitcoin and outflow of Bitcoin, using that technique basically nullifies the capital gains. And I would, on a practical manner, I would take the hypothesis that when you're spending a Bitcoin, the Bitcoin that the last Bitcoin was the same price. So you would avoid all the paperwork in calculating all these little capital gains, capital loss. Okay. That's what I would do on a practical way. Is that clear? Did you guys understand what I said? Yeah.
Yeah, if you had two, if you had two hardware wallets and you receive Bitcoin in one and spend out of the other, from a tax perspective, is that one account in Bitcoin or are those two different Bitcoins?
So yeah, the question is, there was a question here that if we have two hardware wallets, so who owns the hardware wallets? You know, if it's you, it's the same thing. You know, you can have different vaults. You know, it's like having a vault of gold here that I own and a vault here of gold. It's my gold. So it's your Bitcoin. But if they're owned by different legal entities, so let's say you have a C corp and you have some Bitcoin in your C corp, and you have Bitcoin personally, well, that's two different legal entities, and that's two different like capital gains calculations and everything. Yes.
So say if somebody did FIFO, first in, first out for personal, and then they have a business, could they do LIFO for the business and stick to FIFO?
So FIFO, first in, first out.
Yeah,
So first in, first out would, if you choose that method, you will have more taxation. Because let's say you bought Bitcoin 5 years ago,
yeah.
and first in, and that's the first Bitcoin out, then you'd have a capital gain.
Say they already chose that and are sticking with it, but they have a company, could they do LIFO for the company? Because they're two entities?
Yes,
Okay,
absolutely. Two different entities.
thank you.
Yeah. The question was, if you have two different entities, can you choose different methods like FIFO, first in, first out, or LIFO, last in, first out? Yes. They're just totally independent.
I have
Any-
a quick question.
Yeah.
Does IRS look at UTXOs and when they were actually purchased? Or do they just see like your hoard of gold here and your hoard of gold there?
So the question is, does the IRS look at UTXOs? I don't think so, but I think they could ask for it to the exchanges. So if they say, hey, exchange, I don't know how they probably know that because you're KYCing on an exchange. The exchange knows that you're sending Bitcoin to this UTXO. Technically, they could ask, I think the exchange would have to give those UTXOs.
I guess to rephrase my question, let's say I'm using a wallet
Yeah.
that's just auto-magically managing my UTXOs. And so I buy Bitcoin, and I just bought it, so I have that cost basis.
Yeah.
And then I go to just spend it. So I can, in my mind, say, well, I bought this amount of Bitcoin at this price,
Yeah.
and now I'm selling it at this price. But the UTXOs aren't going to be the same because the wallet isn't thinking about this. The wallet's like doing some other way to manage what UTXOs are actually being spent. Does the IRS care about that, or are they?
I mean, I guess like, no, I don't think that matters. It's really like, oh, if you just last bought Bitcoin, then you consolidated an address, and that last Bitcoin is in another UTXO that's older. I mean, I would claim that older UTXO part of that Bitcoin was just bought at this cost basis. Is that clear what I'm saying?
It's a part of your hoard, and so you're spending a bit of your hoard.
Yeah.
I'm just wondering how anal the IRS would be about like UTXOs.
So in my opinion, they wouldn't be that much for, people like us plebs. Like, it's a lot of money. It's a lot of resources for the IRS to like go after someone that makes like a $50,000, $100,000 a year. They usually go after people that makes like tens of millions, Michael Saylors, known Bitcoiners. So for, their employees are making $100,000 a year. Like if they're auditing you to get like, oh, you didn't declare a capital gains of like $202, because you spent that Bitcoin, if they're going after you for $200, they're wasting enormous amount of resources. So that's why I would kind of keep it simple, and I would take some hypothesis. You know what I mean when I say that? Like general, what's that English word again? Hypothesis. Yeah, I would take hypothesis. and just say, hey, when I'm spending Bitcoin, it's the last in that I just bought recently, and I wouldn't worry about it. But if your cost basis, if you don't buy any and you spend some, and the last time you bought some was 10 years ago, well, yes, I mean, technically that's going to be a capital gains. Does that answer your question?
Yeah, so like generally they'll respect last in, first out if that's how you operate, regardless of like what actual UTXOs are being moved around.
Yeah.
As long as from a wealth perspective.
I mean, I don't know the answer of that question, but I would say most likely yes, because you could fight it. You know, if they don't, you know what's going to happen. One day, maybe someone's going to go to court against that and fight it in court. And then you will see what the Supreme, like, probably is going to go to the Supreme Court, and we'll see what the Supreme Court says. But I mean, I would say so. I think it's reasonable to say that if you're consolidating UTXOs, well, I'm not sure. It's a tricky question, but I would tend to say yes. I think it's, if you know that half this UTXO was bought like yesterday and half of it was bought like 15 years ago, probably I wouldn't consolidate those UTXOs like that anyways. But if you do that, I think you could, if you can trace back the fact that on that UTXO, you know, you bought like 200,000 sats that you just spent, and the extra 2,000 sats was 15 years ago or something. Well, like if you can trace that back and you have the paperwork to prove it, yes, that's fine. But you'll never get there. Like honestly, I wouldn't worry about that, but because I don't think you'll ever get there. Like you won't get an audit for that.
Simon, so we have a team in Top Builder named Clams, and they're actually building software to start doing what you're describing there, like all the ins and outs.
Perfect.
Yeah.
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 So perfect. So see, there's tech tools now that are being built to navigate through this.
Yeah.
Yeah. But I agree with you that they probably wouldn't care, because I don't know any like legal precedent, but I imagine like this situation has happened in the past for gold too. Like because gold is split up into individual bars, so it would be kind of
Probably
weird for them.
not, because nobody takes gold. You can't go in a shop and spend gold on, at Three Forks for $200. So probably nobody has used gold, like physical gold, in the last 100 years. I'd be very surprised. Like maybe it happened once, but like it's probably extremely rare. Though in Bitcoin, a lot of people like us do use Bitcoin on a weekly basis or a monthly basis.
I only use fiat.
Okay.
Hey, so gold though, when you add that, can you purchase gold? Like, let's see over here, off 35, when you purchase gold, do you have to claim that?
Do you have to what?
Do you have to claim gold on your tax return?
If you sell it, yes.
Oh, you sell it. Oh, but not
You don't.
Okay.
There's no capital gains event if you don't sell it back.
Okay.
Yeah. It's always the sell that creates the tax event.
Okay.
When you spend or sell, that's the same thing.
For gold.
For gold and any assets that you may have.
Okay.
I mean, you could, if you trade, well, you can't do that, but let's say you'd have an Apple stock and you'd buy, your restaurant meal with Apple
Gold
stock.
and silver though, you still have to claim capital gains?
Yes.
Oh, wow, I didn't know that.
Yeah. Well, anything, like any asset, you need to claim capital gains or capital loss when you use it. Yeah.
You just killed a Saturday.
But again, if you do the LIFO method,
Gold bars.
yeah. Well, I mean, you should trade them for Bitcoin, but that's another story. Just one thing you may want to know about capital gains in the United States. So if you're not married and you don't have any other income, you can have a capital gain of up to $45,000 and pay 0% taxes. So the first $45,000 of capital gains, if you have no other income, is 0%. And if you're married, that amount is $90,000.
Really?
Yeah.
Wait, say that again slower. You said what? What did you say?
Okay. For the first $45,000 of capital gains that you could have, okay, that you realize a capital gain of $45,000,
Yeah.
the tax rate on that is 0%.
Woo, doggy.
Yeah, we're moving to El Salvador, car.
But wait, if you have, let's say you have a salary, you're making $50,000 a year in income, like that doesn't apply to you. If you have no other income. But let's say you're married, that amount is 90,000. So technically you could live off your Bitcoin
As
and
long as you stay under 90,000.
yeah, you'd pay 0%. Yes.
What if you have,
What if you have a, yeah, I was gonna say, what if you make an LLC and have that as the legal entity that accepts, but you're just a contractor for that LLC?
Well, the LLC doesn't have the Bitcoin, right? It's you. So
But if I'm selling my Bitcoin to live underneath that 45K cap, and I work for the contractor who's the LLC that I happen to.
no, that won't work because that's a flow through. So, if you would have a C Corp,
Oh,
okay, and you don't pay yourself any salary or nothing, and you're just like, getting shares or not getting shares, but you're just working to increase the business value.
do you think I wanna go to no salary?
Interesting. Okay.
Why do you think I wanna go to
Yeah.
no salary this year?
But nothing else. Don't worry. Like if you have other capital gains, or any other source of revenues, that won't apply. But it's still good to know.
But if you have, like, say I don't take a salary for Club Lab this year, and then I do my Thriller X thing, then at that point, I would just be a contractor for Thriller X. I guess it still doesn't apply then, right? You still have to pay capital gains?
Well, are you getting revenues from somewhere?
Yeah,
Yes. So
you still have to pay.
if you make at least, let's say you would make $50,000, well,
Yeah.
you'd still pay capital gains on your if you would sell or spend Bitcoin.
so that 50,000, is that a specific figure? Or say you have an LLC that has maybe a few thousand revenue, or you get a few thousand revenue from other investments you exit, does that decrease the?
Yes, it does.
45, or
Yes.
does it eliminate it totally?
It decreases it.
Okay, thank you.
So let's say you have 3 LLCs and they pay you, you have a $10,000 profit per LLC. Well, that's 30,000 out of the 45 that you've used.
This is amazing news.
Right. It is good news. It is good. It's better. I mean, it's better than in Canada, really. And after that, the capital gains tax up to $500,000 is 15%.
So once you hit that 45,000, you
Yeah.
go any higher, how much is it?
It's 15% up to like around 500,000, and
After a
over
year,
that it's
right?
20. What?
After a year, it has to be at least a year.
Long term.
Yes. There's the 1-year rule that you need to hold for a year
Okay.
for that to apply. That's true.
For the 15%.
For the 15%, yes.
Okay.
Do you think that number will go up because of inflation?
Yes, it has been going up every year.
Okay,
Yeah, it goes up with inflation.
nice.
Well, CPI, that is not inflation. But anyways, it goes up with CPI. Okay. Any other questions in that regards?
Yeah, this is amazing.
Sales tax. So you have to pay sales tax, or you have to, as a business, you need to recuperate or take the sales tax from your clients and give it back to the government. This is quite complicated because you can have sales tax with a state, like the state of Texas, counties, cities. Though I would say, as a general rule, if you don't have 100,000 in sales in any jurisdiction, you can, in practical way, ignore the sales tax. But once you start hitting around 100K in sales per jurisdiction, you will need to start thinking about claiming the sales tax and giving it back and filing it to the state, county, city, if you don't want to get in trouble. But under 100K, I would not worry about it.
YOLO.
There's a software that's called Avalara that is very good in managing all the sales tax across the country. And Taxi USA can help you with that if you're in that situation. Any questions or comments?
So most startups don't make 100K.
No, they don't.
Yeah.
Per jurisdiction, so no. It doesn't apply to startups for sure. It applies if you're a Bitcoin business, well, any business that,
Yeah, with that, well, never mind, you answered that the last slide, never mind. I was
Yeah.
gonna ask you about the Bitcoin inflows.
right.
So like the SaaS flows that a Bitcoin business will generate.
Yeah.
Didn't Amazon lose a case where they have to pay sales tax for e-commerce items in every state they deliver to?
I don't know. I'm not aware of
I
that.
think they passed them, I remember what you're talking about, but I think they now charge.
So the question was, Amazon lost a case and they need to pay taxes in every
I think it was where
jurisdiction.
they have a
They forward it to
distribution
the
center.
customer
Okay,
now.
let me
Yeah, I
check
think the
that.
customer pays for the taxes.
Yeah.
But if we, so if
There was a time where you did it, I remember that time.
Yeah, that was a great time.
Right.
if we
In
were,
the 2000s, you didn't pay taxes for.
Oh, really?
Yeah. it was
Well,
crazy.
legally, you're supposed to. It's just classified as a
did.
use tax.
Yeah.
And it's voluntary to report that, and nobody ever
But
reports
2.0
it.
was amazing.
And you had another question, or? All right. And lastly, there's other taxes like franchise taxes. For example, if you're a C corp from Delaware, you need to pay a franchise tax. The base amount is $225 a year.
What are the fines for being late? $225 per year?
$225 per year. If you're late, I don't remember. It's probably like $100 or something like that. But I'm not sure. Usually the lawyer that incorporated your C Corp will be able to help you with that. Also, let's say in Texas, if you incorporated an LLC in Texas, there's also some kind of franchise tax, but it doesn't apply to businesses making less than $2 million in sales per year. So, if
Simon, what have you seen more people now that Elon's moving away from Delaware, move to Texas, like change their C corp? Have you seen any of that?
Not yet. I mean, I think Elon is kind of the first one doing it, or the first really big public case that's doing that.
What was that all about? Just so.
Yeah. Okay. So you're asking me. I know about that. What's that about?
Yeah, what's that about?
So basically, Elon, like 5 years ago, before the big ramp up of Texas, like in sales price, he made a deal that if he would, the deal was something like if he would bring the business to a 500 billion market cap and profitability for 2 years in a row. I think they're slightly profitable, Tesla. He would earn like a 30% stock option of the whole business. Like he would own an extra 30% of stocks. Because at that time, the price was like, the market cap was like 50 billion. So basically, if he 10x the business, they would give him, like the board of directors agreed to pay him like a 30% stock option of all the shares. And what happened is he made it. So Tesla's worth more than 500 billion now, and they are profitable. But someone sued him in Delaware saying that deal shouldn't exist or whatever, and that person won in court, in a Delaware court, that Elon cannot have his bonus after achieving what was the deal. There was a deal, he made it, but then some shareholder or some board of directors sued, and they won in the Delaware, in front of a Delaware judge. So that's why he's moving to Texas, basically. Yeah.
When will people learn to stop fucking with Elon Musk?
Yeah, I know, right? I mean, all right. So, Taxi USA, which is my business, can help you with all these. Okay, people at home, just reach out to me on Slack, on the Pleblag Slack, or ask Car for my phone number, and I'll be glad to give you a hand with this. Thank you. Stay humble and stack sack.